What's going on, everybody? Chris here. Talk about the Covey portfolio performance. So, with the day and how it closed up on the day, pretty significantly, a lot more than yesterday. I thought that I would be at a huge loss at Covey, and then I would have dropped from first place to maybe 15th or 35th. No, I'm third. I'm like miraculously in third place. I don't know how that works, but I think maybe a whole bunch of people started to go short right around the time when I was at my peak in first place, and then now they're getting squeezed. They're trapping the Bears. Obviously, it's not decided yet, but they're trying to trap Bears. It looks like, and I just happened to not move in my portfolio, and because of that, I still have a high efficiency. So that's like a thesis for why I'm there in third and not in 15th. So I lost 7% on the day's gain, 41% monthly gain. So not 60% as I would have liked, or 50, but 40 is okay. I'll take 40. But I don't know. I'm starting to kind of rethink my monthly thesis that there'll be high volatility. We have to see the weekly close, but I don't know. Like the Japanese yen still looks like it's about to close really high to where it's a huge red flag for a risk off. You know, this is it's about to break the weekly market structure to begin going higher, and that's really significant. For the most part, weekly resistance is right there. There we go. So we would have broke two weekly resistances, one right there and one right there, about 829, 837.7. But it's really strong. The idea is maybe at the weekly close it comes down a lot, but for the most part, this is a huge like risk off kind of move. It kind of made its impression on my trading. Like I came in today's trading session with a huge bias that I didn't know how blind I was, and just it came out also in my risk management. About $500 loss on each account on the day, so roughly like 6 to 5%. Yeah, 6%. 6% loss on the day. So now I'm starting to just make some adjustments, but finishing talking about the Covey portfolio, I'm going to do an analysis and just seeing what I'm going to cut, if I'm going to cut anything. And I think I'm going to have to make the judgment based upon the weekly resistance. If we break the weekly resistance on oil, S&P 500, or DRIP, or the VIX to the downside, or the crypto to the upside, then that's when I'll dump it. I thought like maybe I would do an intro week kind of break away from my bias. But I think with the volatility the way it is, how anything can change, how there's some indicators saying that a huge risk off move is coming. We just don't know when. I'm thinking about just keeping the things the way they are and just increasing the confirmation. The confirmation to flipping bullish or bearish. So that's my Covey portfolio performance. I'm in third place, still able to have access to a lot of rewards, and 40% roughly monthly average. The goal is just to keep that as high as possible, and hopefully, I don't know, we get a home run. You can't bank on the home runs, but hey, I'll take the 40% win on the monthly average. Okay, Ninja portfolio performance summary. For the most part, talked about today's performance. I think it's still here. So roughly $500 loss in the day. So where did I go wrong? I think I started. So as far as like the trading rules, let's see. We want to make a copy of this and then put it for today, 21. Where did I go wrong for today? I traded outside of the high probability trend time. I started trading earlier than the New York Open. I just got so bearish. I did the macro fundamental video. I was just so bearish that I was ready just to short on anything that had a pullback sign. No real market structure. Now I'm thinking it has to be an H1 or H4 breaker before I can get involved. And here's the H4. I don't know if this is the aggressive mode. It is the aggressive mode. Let's refresh it. Maybe. No, there is no order block. Here's the H1. And it was such a wide range that I was like, well, I kind of want to get in early. And that was just the wrong thinking. So I think going forward, so I got two sorts of signals. One is these breakers. They're a signal. And for the most part, I only listen to the H4. But the weird thing is, I also, so the day trading signals, right here, where I get like an alert of sell the rally or buy the dip. And to be honest, like I got a couple buy the dips here, but we broke below and got back above. And then here, we didn't really get a buy the dip signal. Maybe we did here. But it was really choppy. I mean, you could see just on the separation of this 5-minute band, the separation is the gray band from the green or pink. And when it floats in the middle, it shows to how choppy it is. And I did not listen as to not trading the chop. I wanted to short. I tried shorting this signal, which ended up not working out for me. So as far as like the day, I think we came from this area. So this is the New York Open, and then we floated here. And I didn't go long. I wanted to fade. When I saw this, I wanted to fade it, and any kind of lower high, I wanted to fade it, and that just turned out to be the wrong move, and ended up with a $500 loss. And I think that what's really happening is a huge. They're trying to make another bull trap. That's kind of my conclusion, and we'll get to the analysis, but this is more about the Ninja portfolio performance and trade plan. So things that I didn't follow was an infraction on trading before 7:30 pre-New York. I was trying. So the idea in what the setup I was trying to chase was London usually puts the high or low of the day in. So I thought if I caught the high or low of the day on the fade in London, that it would be Gucci. I would have a nice position, and I was going low and slow. I had one micro, and then eventually I started to get more greedy and started to manually add more micros to it. And then before I knew it, I was starting to rack up some loss. And I don't know. It was just really bizarre how one micro turned into four. The idea was to build a position versus to gather data. So I think I really need to have some kind of system for the day day trading bias. Let me get rid of that alarm. But my entry was just really off. I think I didn't really do. I didn't follow the entry system that well, and now I think it needs revision. So I want to add a comment. Needs revision. For new standard, because I think it needs to involve like things related to my H1, H4 breaker. We need to see a change in market structure before using the buy the dip or sell the rally. Needs confluence with market structure break and buy the dip and sell the rally signals. Man, why is it laggy on my typing? I hate that. Because I started to add more than 1 micro, like 2 micros for a 30 tick stop loss is roughly 1%. I started to do 4. So I made an infraction for the risk per trade. So I broke that rule. And then technically I traded away from the pullback zone. I was just getting too hasty. Surpassed 1.5% loss per day, and risking more than 1% trade. Roughly a 6% loss on the day, around $500 loss. So this is going the other way. I'm like backsliding, and as far as my risk management, and it's sort of it's a big wake up call to where I need to take some days off from trading. If anything, just wait for the market structure to break, because I think that's kind of what it comes down to. Now that the market structure is broken to the upside, now we can wait for the market structure to break to the downside for the beginning of an entry, and now we could just stop losing having lost days. Now it could just be neutral, no lost days, and just wait. And punishment's still the same. Longer duration of passing evaluation, and with longer evaluation with more rebills, and or possible failure of account or blown account. So it's something I have to I have to start using the scale and just go low and slow and just stop. The addiction to want to keep on trading is real. Like the gambling part where you need to take risk, or like the need to take risk. It's just so potent in this business. To where it's just so hard to keep the risk management under control. There's like excitement. It's almost like shopping. It's almost like spending money. There's a high to it, and it's something that I need to get under control. And the first part is just being transparent, putting out a public video, and to where I can begin building an account of this ego, and just really seeing the ego for who this person is, and then creating a strategy to where I can tame it, to where I am able to have like a system in place for the ego in some way. And first is just getting some transparency, seeing the problem areas, developing strategies with that, and then going from there. But a lot of it is because of a lack of strategy and of course, discipline, but like we need new strategy or new things to counteract the lack of discipline in this area, because and that's kind of just what this is about. But daily overview, going back to the lag is real. Daily closing thoughts. S&P 500. All right. This line, I don't know why that's there. So, daily closing thoughts. Wow, what's going? The lag is so bad. All right. Looks like we had a close on the day, and there's no bar that's close for resistance. We have the fair value gap here from previous wick to the wick after the engulfing candle, and we have a 12-hour resistance there, and then we have this daily resistance. So, and we're really close to a really terrible time to trade. So I think the 23rd, the markets close early. It's an early close of a trading day. And then technically tomorrow's the last real trading day. So this is just like a lot of chop. I mean, you saw the bands. The bands look terrible. They're all separated from everything. The hourly is separated. And then the 5-minute is, majority of the day it was separated. So it's just a lot of chop. But this is technically a seller zone. And I made a daily 40 moving average channel for bull traps and bear traps on a smaller time frame. You know, we have the weekly bull trap, bear trap for these moving averages, and then we got the daily one. And I think we're really close to, we could fill the fair value gap and still be in a bull trap. And then as long as we reject from there. But it would be interesting for it to fill the fair value gap. And the idea is just to wait until market structure breaks. That is the goal. But right now, we're at a point of a possible reversal. And I think that's what we should call it. A point of a possible reversal until market structure breaks. But that's the S&P 500. And when we look at here, H4 is bullish to the upside as far as market structure break is concerned. And then we have an untested breaker, which is highly likely to get retested here. So that's that for the S&P 500. Oil, take a look at oil. All right, so oil, we're looking very similar. We did close above, so all of this is now support on a daily closing basis. And what really matters is where we close on the week, and that's kind of where I'm going to make my decisions on the portfolio. But now this is a possible resistance point here, since it's an up-close candle. And technically, we could just call this support now and just kind of clean up the lines. We want to see a retest into here. But this is technically resistance. So we could go, the range is anywhere from where we're at to the monthly open and possible reversal there because it's daily supply. But as far as, we're not anywhere close to the weekly close, but we're putting in a really good rising wedge until we retest this area. It kind of looks like we might have done that, but not really. We just now started to break above, and it needs to come back for a retest. Roughly at these it needs to hold as support into, I guess this demand starting right here. But I think that's that on oil. Next, credit spreads. So this is going to be interesting. Credit spreads to see kind of how it's progressing. So HYGH. Now we have flipped this support or resistance into support on the daily close, but we're under So we have on this day the bull trap, bear trap, moving average channel, and we're currently inside it. So this could be a bull trap for HYGH because it's inside the band for 40. It's a 40 moving average channel band on the daily, and it works in my respect on the daily a really good version of maybe we should put it at 50, but I think it works really well as a bull trap, bear trap. Kind of signal. I think 40 is better. All right. So right now we're at, I think, resistance for this possible deviation swing failure pattern here. So we'll see what happens in this 24 moving average. We'll see what holds. So no conclusiveness there. And we don't really need to look at the market structure because it's just there's too many gaps. And then here we already dipped into the bear trap channel on that daily, and we came back up and we closed back above resistance for support. But we're still underneath a lot of resistance, especially that 24 moving average, and under these daily resistances. And for the most part, we can get rid of this, and then we could just have it on the up candle here. All right, next. Currencies, euro, Japanese yen, US dollar. We've kind of already went through the Japanese yen in a very light manner, but euro on the week isn't looking good. We're below the yearly open and the weekly open, which we were above. We closed the week above, and now we're in a retest. If we can't get back above, it's going to be bad news for risk on. Just because whenever the euro goes up, the markets go up. But whenever it goes down, the markets go down. And an example of that is just the bear market of the euro. Since we've been the S&P 500 has been going down, so has the euro, but it's recently climbed back up, and we're hitting that resistance point of the yearly open, and we've wicked back below, and it could be trouble. It could be in trouble, and this is the first sign. Deviation, left shoulder, right shoulder. And that's kind of why my bias is so strong to want to short. But the thing is now, I understand I got to wait for a market structure break to the downside before really getting aggressive like that. And just the whole idea is just to wait, be patient, young grasshopper. Just close your eyes, be in zen, and you can make it. Have your patience. All right. Now, going back, getting lost here. Japanese yen. And as far as like a market structure standpoint, the euro, we did have an H4 breaker. We have a nested breaker, technically. So a breaker above us, a breaker where we're at, a support, and it's just not a good deal. Japanese yen, we closed the day above all of these resistances that are now support. Now we kind of fell below 1, but technically now this is resistance instead of that one we had marked. Okay, but now this is support, and it's probably going to make a flag, or it's going to really come down here and retest this one. Who knows? But it was such a big explosion. As long as it holds here and closes on the week, it's going to be a nice weekly breaker. Japanese yen, we're currently in a weekly breaker to the downside here, according to this. But if we close the week above here, we would have made a lot of progress in really stomping out these bears on the yen. and then next weekly resistance is there. But this is now, it's almost confirmed as support, all right here. But technically, yeah, even this one. Oh, yeah, I think this is confirmed as support now with the reclaim. I think it's getting there. It hasn't gotten there completely. But we could now kind of remove and just have it only at the down weekly closes as weekly support, just to kind of make it less messy. And then here on the H4, untested H4 breaker, I don't know if it's going to come down here. That's kind of the speculation, is that it could come down here. But the thing is, this thing looks like it's ready to rip, ready to go. But no one knows. That's the problem. All right, US dollar. So on a daily closing basis, having higher lows on the closes, and it just looks very ambiguous of what is going on here. It's coiling, we know that, and then this is now resistance, close down below, and technically we could just move the lines around to where it's just above the daily up candle closes, like this one, and that one. I mean, we could put one here, but we'll just keep one there. But yeah, the dollar looks very inconsequential. Looks like it's going sideways. And then VIX. So looking at the main deal, closed below the monthly open and into daily demand. So as long as we don't close below daily demand, we're okay for more upside on the VIX. So right now, we're just waiting until there's a reclaim. So now this is resistance because it broke. And if we go to the Pepperstone CFD version, very similar. Daily support here. Into daily demand right there, and we close below the monthly open, but it's just pretty much winding up. The closes are lower, and then the down candle closes are higher, so it's really winding up, and we're getting ready for a move. It's just no one knows when it will come. That's the problem. And then we can get rid of this. But I think I like this one better. It looks cleaner as far as like the VIX goes. And then we look at the market structure. It's going to be looking a little dirty as far as the market structure break. But yeah, we got an untested breaker to the upside. So we're going to want to see a retest in this and how strong it will be. But for the most part, this is a weekly breaker to the downside, and it's going to want to go lower. So we'll see if we get more downside, but right now it's kind of just holding weekly support and holding daily support. And until there's a break in that, there is no reason to see that it could continue down lower. And as long as like we keep on having higher daily closes on the down candle, the better. So it's just showing that fear is kind of getting set in. It looks like equal lows almost, a double bottom in some way. But hey, that can change. Anything can happen, right? Videos to come. We did the macro outlook. We did the macro outlook already. Need to pause those signals since waiting for a market structure break. We did the macro outlook already, and for the most part, it looks bearish. Like whether it's the reverse repo, the point of view from the lender, it looks super risk off. Like everybody's safe and liquid. Whether it's the consumer, commodities, the lumber to gold ratio, base metal to precious metal ratio, the for the most part credit spreads and the currencies. The yen is super strong. Businesses, manufacturing, production versus inventory. The high inventory, low production, and other kind of fundamental macro outlook is the crunch on real estate and cyclical durable goods. And what that says, and soon we're looking for a crunch on unemployment. Right now we're hearing a lot of data about credit card debt rising. So macro outlook just doesn't look good, and we're just looking for the fragility to start and the momentum and things that I'm going to be implementing into my trading system for the day time frame would be to not go in the direction against the MACD, 1 hour, 4 hour, and also don't go against like the 1 hour market structure break in terms of like trading. So that's something that I'm gonna have to implement as far as like experimental findings this week. So, but as far as a video for experimental findings this week, I wanted to try the Polarity ATI bot, turn it on trend mode, and see if it does better than I did this week. Both modes, trend and regression, and then do a test with the slow and wide break even, and just to see if I can come up with a strategy to delay and also to overcome any undiscipline. You just need a winning strategy to overcome undisciplinedness. It's usually undisciplinedness is just a confusion of what's going on, and that's my interpretation. That's one interpretation of just overcoming undisciplinedness is just you actually understanding what's going on and coming up with a winning strategy. And then developing tomorrow's trade plan. Pretty much tomorrow's trade plan is just to wait for a market structure break to the downside. And it's pretty easy. Just make it super simple. Tame that, go. Always got to be trading. Always got to be risking. Got to get my hit kind of mindset. And then want to develop the portfolio whenever I get some free time. Most likely it's going to be on my day off Friday. But most likely all of these things like experimental findings is going to be developed on Friday. So the things that are done is the macro outlook. That one's pretty much done. But other videos is the experimental findings in the Charles Schwab thematic portfolio. 25 stock down to 10. And then we finished tomorrow's trade plan, so that's done. So thanks for watching. And I hope to just show ever-increasing performance in just developing a winning strategy to have better risk management in the future.